What's up, YouTube? Joe Catchpolia sitting on the couch making some money investing in fractional real estate online as usual. It's not quite Friday. I'm a couple hours early, but I'm going to do my this week's installment of the 52-week challenge, letting you know which fractional real estate deals I bought this week. Because I'm just going to be too busy tomorrow to get this out early in the morning or even later this evening. So hopefully everyone's okay with that. I know I try to do this on Fridays. You probably won't see this before Friday unless you're one of the first people to watch it. So let's see. What do we got here? I bought. Is it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10? No, it should be more than that. 11. Yeah, 11 notes on ground floor, one property on Mogul, and then three on Lofty. And some of these are ones that I haven't talked about before, so I'm going to just jump into it. If you watch my videos earlier this week, you know that I took a big chunk of money off of ground floor. They did this forced redemption, basically where they cashed out a bunch of the LROs early, right? They just paid them out so they could move them over to some other securitization that they had institutional capital that was interested in. So wasn't super excited about that. I don't like that, I can spend this time trying to build a really diversified portfolio. If you saw this last week, I probably had like 120 something in here. And so like half my portfolio got paid off. I did start reinvesting before I realized what they were doing. So I reinvested in, I think I had done like 10 or 11 the last week and then 11 this week. I do still have a little bit money I left in here that if some LROs pop up, I'll go ahead and put it in. If not, I'm just going to slowly take it off this platform. It's kind of disappointing. I thought that the real benefit on here was the ability to get really wide diversification. But if they can just pay me off at any point in time, it's not letting them just roll over naturally, then there'll be times where I'll just have these big chunks of cash and either have to invest bigger lump sums in each deal. Well, and I don't even have that much money on this platform yet. Like if I got to a point where I was putting a significant amount of capital on here, I'd be stuck, right? I mean, they pay off 50K. It takes forever to reinvest that unless you're just putting much bigger chunks in every deal. And that's not what I was hoping for. I was hoping to try to get to, 200 loans or something, 150 loans. I was already at 125. But anyway, I did a whole video about what was going on there. Not sure it was completely accurate, or I think I found out about the securitization thing afterwards. But the gist of what happened was exactly the same. But anyway, so picked up more, have a little bit of diversification. All of the extended ones had been paid off, but now there's already an extended one again. But yeah, you can see, yeah, I've had 134 payoff. I only have 66 outstanding at the moment. So, um, I don't know. It was a little frustrating because I really like this platform, but when they're going to do stuff like that, and it is the second time that I had a bigger chunk of loans pay off, but it's this time it was much bigger than the time before. Um, I think their customer service was like, well, do you want us to tell you something else you can invest it in, or would you just like to take it off the platform? Like they, I just didn't like the way they went about it, right? So I don't know, a little bit frustrated, but at the end of the day, if you wanted to pick individual loans and put bigger chunks in, I think you can still use this platform. I think it's better than, I'd pick it over a lot of options out there, but it is not the tool I was hoping that it would be. On the flip side, I bought into the Ratliff on Mogul. This was one of the properties that I really, if you watch my video on this, it's on the Mogul playlist. I struggled to have a complaint about this one. Before I forget, please like and subscribe. In the description to this video, I've got a link to all the places that I invest on in fractional real estate. You want to do your own due diligence on those platforms and on any of the properties you buy on there. Just because I tell you I really like this property doesn't mean that you should buy it. You should dig into it yourself, figure out if it makes sense for you. And also, some of those links will give you some free money for your first investment. But again, do your own due diligence on those companies. Tickle the like button, join our Discord. I think that's everything. But yeah, so, oh, and if you do get onto Mogul, you want to get get the referral link that gets you the $50 free, but also use the link that helps you join a club. The club rewards don't work exactly the way you might expect them to, but once you get into a club, you pick one that has the the full 2% payback. And it's not that you get 2% on every investment that you make, it's that the club gets 2% on every investment that a club member makes, and then that gets split up relative to your total investment in the club. So if there's some people that have invested a whole bunch already, they're going to get a higher amount. But if you have an active club where there's a lot of people that keep investing, over time, I think you're better off still doing it that way, especially if those big ones early on continue to be bigger ones. So anyway, I joined the 400 club. I think it's going to be a smart move, but we'll see. I've already gotten, rewards trickling in, and I think as I invest more, it'll be more. Anyway, uh, but again, you want to look into that. It seems like the clubs are really purely free money. It doesn't seem like there's any downside. It's really their marketing, provided you were going to invest anyway, right? So you want to dig into the property, make sure it's something that you want. So, what was this property? 7 bedroom, 2.5 bath, a pad split style, co-living, rent by the room. Um, this is one of the first ones that they had where they mentioned the ability to add additional rooms if they wanted to. They said they could get up to 8 to 10, but their underwriting was just showing it as is, without adding additional rooms. So I thought that was pretty interesting. Um, it's let's see, Douglasville, Georgia, which is I don't know, I think it was like maybe 30 minutes, maybe a little bit more outside of Atlanta. But like I said, I did a full due diligence video on this that's in the Mogul playlist. It's one of my favorite ones I've seen from them in a while. And that's saying a lot because I like a lot of the stuff they put out. But I think valuation wise is what really got me on this one. It seems like they're not overpaying just because it's spitting out a great yield, and that's a and it is, that's their average yield. But the year one yield was like somewhere north of 10%. I don't think it's on here. I think it's in their analysis tab, which I don't have open right now. Um, the next thing I bought was on Lofty. This is one I think you've probably seen on here for a while. I always hate how it doesn't show how many I really own because when you stake them, it pulls them out of here. But so I have some stakes, but this is one I don't have a ton in here, but I picked up more because you can see I bought the dip, right? Whenever I have ones that I like, yeah, there is a turnover right now, so the yield went to zero, but I don't expect it to stay that way. Wait, is this one a turnover or is this one they're replacing this might be the one that they're replacing the AC. I don't know. No, I think this one was a turnover. Yeah. The turn repair. Yeah, so it's both, right? They're doing a turnover. There's some expense involved in it. But yeah, I expect this one to be back up and running relatively quickly. Now this is being managed by Whalick, which I think is I think he's going to do a good job with it for as far as I can tell so far. He's done well with the other properties that I already owned that he was the co-owner of. So when this went down in price, it just seemed like a no-brainer. From a discount perspective, it has relatively low debt. It had been a really stable return. I only imagine it's going to get back to there. So yeah, decided to just pick up more when we had this. I didn't get these $30 ones. I was somewhere around here. But anyway, it was nice because it averaged down my basis in this one a little bit. Um, the next one I got a piece of was this South Solano Drive. This is what is this, 7 units or more. Property description for 8 unit mixed use property. This is one I did a full due diligence video on this quite a while back, but didn't buy into it at that point in time. Since then, the price had gone up considerably. And as I followed it more, it made me think I actually did want to be in this one. And so late last night there was a dip in it, or maybe it was even real early this morning, but there was a dip in the price, and so I just picked up. I only got 5 tokens because the slippage really moved it up quite a bit just from buying that many. But it was really just opportunistic. Saw a good price. It's already moved up $6 or $7 since the price point that I bought it at. I think I was in at like 50. I think that's not right because I think my price point was actually 58. But anyway, I was really happy with that. It's already popped back up, and the this is one I own one other one from this co-owner. It's been one of my best performing ones as far as just consistently spitting out money. I think this one's going to be good too. One of the things I didn't like about this one initially is he has plans to pay down the debt, um, but which makes it so you get diluted really quick. But it seems like he put those plans on hold for some reason, which actually, I prefer, right? I don't want him to pay it off anytime soon because we get a better yield on it. And even though this is one of the few that has a pretty decent cap rate, even after the debt gets paid off, which is why I was like, yeah, you know what, I'd like to add it. And I didn't buy it, like I said, just bought a little bit anyway. Um, hmm, the last one I bought was this Ohio three property package. I think last week I had bought a little bit of this too. It's mostly price driven. I got in here again when there were some dips. But there's also a proposal out to, so this is actually three properties in one DAO, which makes it different from most of the other DAOs. And there's a proposal that I don't know if I don't think it's out yet, but it's being worked on by a couple of members where we're going to try to sell one of the properties and reinvest that cash in the other two. I think in general it's a good plan. I think the details still need to be worked out a little bit. But this is more than anything, it's a basis play for me. The price relative to I think that my average basis, it's basically saying that we're paying $40,000 per home, which for me I'm pretty happy with. Maybe even a little bit lower than that. I think when I did the math, that was somewhere around there. Um, I'd buy any one of these for $40,000 if they were whole properties. And even though it's a market I really am not excited about at all, Akron, Ohio, don't love it. But I think that, the ability to sell off one, get the other two running a little bit better, make sure the OR, or, make sure they're fixed up to if there's any issues, make sure the OR is full, that there's no debt. And then next time there's a turnover, we can decide, does it make sense to sell the next one, right? And I think for a lot of these properties that we have a very low price point and we're in a market that is going to be challenging for the long run, um, you know, a plan to liquidate relatively soon is probably a plan that makes sense, right? I mean, for sure, the worst performer of the bunch that has, where this DAO doesn't have the capital to, for the upcoming capex items. I think that makes 100% sense. And then, yeah, depending on how it works out after that, we'll see. But so yeah, for me, especially when I got it on the dip, that price point just made a ton of sense. That's everything I picked up this week. I did want to mention, so please jump in the Discord. Let us know what you're buying. If you don't want to do it in the Discord, you can put a comment in this video, or you're always welcome to DM me. I feel like that's the choice that most people make. I'm happy to talk to you guys individually. I really think it's best for all of us as a community to really like share ideas and think about this in public. If you don't want to share your specific assets, I'm 100% fine with that. If you just want to say, hey, I'm buying long-term rentals on Lofty, I'm buying I'm buying whatever it is. Especially Lofty, I think is the one that it makes the most sense to sort of keep your cards a little closer to the vest, right? Like not sharing everything, because if I'm buying it, it moves the price up for the next person. But especially like on Mogul or ground floor, a discussion about, if you like those properties or not, it doesn't impact you. There's no potential negative impact that I can see, because we're not moving the price unless it's one that's just going to sell out quickly. And I think this one it will be another one that sells out quickly, but it's not selling out tomorrow, right? So like if you want to talk about it, and I don't think so anyway. 70,000. What's their total raise? It's only like 180, I think, right? 182. So it's going to sell out pretty quick, though. I mean, they're more than a third of the way there. This is not actually live on their site yet. It is just the VIP pre-launch, you watch the webinar launch type thing. But yeah, I think there's no downside to discussing these deals with each other. And I'm getting good insight from other people in the Discord and other people in DMs, and I think that doing that as much as possible is helpful. Like I said, on Lofty, it's a little weirder because you are competing for those lowest price tokens. But at the same time, I'd much rather have a bunch of smart guys in the same DAO as me versus people that are just going to make crazy decisions once voting time comes, right? And so I think that it's been really effective being in some of the same investing in some of these same DAOs with other people that I know and trust, and we've made good decisions on some properties, and I think you can see that quite a bit going on right now. Other than that, I also wanted to mention I'm going to do another live with Mark, the financial firefighter, tomorrow morning at what time? 10 a.m. Eastern Time, 9 a.m. Central. If you didn't watch last time, it's just he's got a regular real estate investor focused channel, and we're doing what we're calling fractional Fridays. I think 2 Fridays a month probably is what we're going to stick with. Go on there, try to educate the normies about fractional real estate. I think it'll be good to get some like more true real estate investors over onto some of these platforms. So if you have time and you want to tune into that, that'd be awesome. You know, make some friends in the comments and whatnot. That is all I've got for today. Until next time, I'll just keep making mistakes so that you don't have to.